Hey, good morning. My name is Dan Holland. I'm joined here today with the one and only Neil Howe. Nice to see you again, Neil. Neil, as many of you know, is the head of Demography here at Hedgeye Risk Management. He has a phenomenal new piece, which I highly encourage you to go out and read if you haven't already, on Brexit. It's what we're calling it is the consummate guide for investors on all the various implications, and there are many. Neil covers it all in granular detail on our website at hedgeye.com. Neil, where do we start?
There's a lot there, a lot of moving parts. It's kind of like a five-dimensional chess, where there's so many different storylines, so many different cause and effects chains you can follow here. Basically, what I did in this piece was look overall at the core cause of what happened, right? This explosion that no one expected. I think markets should have expected it. That's a whole other story. Is the betting in the last few weeks?
That was interesting. Right. That was one of the points you made at the very end, which was very fascinating.
One of the things I found out, by the way, talking with a number of traders and people who are very good at figuring out how to make bets and make in various different countries. It was extremely difficult for a non-Brit, a non-UK to place a bet in London. You couldn't do it just from America. We actually, we caused a lot of those offshore betting sites to close down because the CFTC didn't allow, doesn't really frowns on futures trading. There's one in New England, predictit.com, and there's Iowa Futures and a few of those. But anyway, it's very difficult for outsiders to get in, which means that this trading on the futures was dominated by London financiers. Right.
Can I just jump in and make sure to mention this? You were highlighting this risk before the vote.
Yeah, they
were gaming.
This was last Monday. I had a piece about a week ago saying that the markets were totally undervaluing the odds of Brexit. And I pointed out there was absolutely no explanation between the differences between the actual polls that were coming out and this hugely low probability, which everyone is following. And by the way, on those probabilities, the pound was going up and down lockstep with those probabilities. Why would the financial institutions? And this is what we know too, by the way, when the actual, we don't have no data on this, obviously, these odds makers don't publish any material. But when they were interviewed, they said, there's no question, the number of bettors on the Brexit side were small individuals betting a little bit of money. On the other side were just a few players betting a lot of money. These were the banks. And there's I think it's now clear afterwards that what was going on is these banks were stacking the odds to influence the pound. They didn't even care if they would win the bet. They wanted to influence the market.
Interesting.
You see what I mean?
Yeah.
And because it was such a thin market with no ability for outsiders to get into it, this is the problem with crowdsourcing. Crowdsourcing is great, and I'm a big believer in futures markets in general. I think they're a great way to assess, get the best possible assessment of something that's going to happen. They've generally worked very well in elections, but they can be tainted, they can be manipulated if they're not done right, and this is the case for that.
Now,
overall, I broke this problem up into four big areas. One is the trade shrinkage. That's what's causing this.
You call it the quadruple whammy.
The quadruple whammy, and so four whammies, One was the trade shrinkage. The UK has a huge trading economy. 28 to 30% of GDP is traded, exports. Of that, about half is to the EU. UK's exports to the EU as a share of GDP are slightly greater than the United States' total exports as a share of GDP. So it's a lot. Estimates differ. We give a few quotes in there. One estimate that's often cited is 5%. Of 5 percentage points of that 14% is due to the special relationship with the EU, but it's anyone's guess. Could be less, could be more. This is what we're looking at, and that's basically causing all of the other dominoes to go down because people are looking forward. Oh my God, we're going to lose all this trade. We're going to have a completely different kind of trade flows. With the dollars going, the pounds going down for that reason. That's going to completely reorient the trade flows. That is bringing in causally the next issue is capital flight. So because there's not going to be trade, they're not going to engage in this kind of trade with the EU, capital is fleeing, particularly the capital that's highly mobile, which is oriented around financial markets. Remember, London is the financial center for the European Union. All of the derivatives trading, all of the wholesale trading in euro-denominated securities, 25% of bank deposits in the EU are through UK banks. I mean, you can go down the list, right? A couple of other interesting figures. 50% of foreign direct investment into the UK is from EU countries. I mean, think of that. And you know, those countries obviously want access back into the EU. Here's another interesting statistic. 50% of non-EU corporate headquarters located in the EU are in the UK, typically in London. And these are, we talked about this morning. These would be like eBay and Caterpillar and all these companies basically are located in the London area. Well, they want access into that's why they're there, right? They get access into the EU market. So we're going to have a big flow of jobs and capital out.
Where do you think they're going to go, if you had to guess?
Well, Dublin, Berlin, not so much Berlin, but particularly, well, a number of cities in Germany, I think, and Dublin have been talked about.
So Dublin, do you think is going to be a huge beneficiary?
Well, yeah, they'll stay in the EU, but you know, Bonn and Berlin and obviously Germany as well.
Right.
PwC estimates 100,000 jobs in finance alone will be lost over the next 10 years. Many people are saying that already U.S. banks, the big investment banks like you know, Goldman Sachs, all the big ones are already planning to cut 10,000 jobs as we speak. This leads to the third whammy, which is the real estate crash. The London area constitutes about 12% of England's, well, the UK's population, and about 22% of its GDP. And that's where a lot of this stuff takes place.
And that market's hot to begin with.
Yes, that's the problem. That throughout the UK, housing prices have regained about the level they were in 2008. In the London area, it's 40% higher than it was in 2008. Everyone's been wondering when that London bubble it's popping now, and everyone who's in real estate there says the bottom has dropped under the market. Interesting point, if you look in the FTSE, and you look, they divide it up by sector, you go to the FTSE site, and they'll actually divide it up by sector. Every company that is associated with housing and real estate, running real estate or investing in anything like that, was down 20 to 30% last Friday. So investors are already aware of this. That's the third whammy. The fourth whammy is paralyzing uncertainty. This whole business that people are talking about Article 50 of the Lisbon Treaty, it's unbelievable. So apparently, England has to, I keep saying England, a word that's become much more popular in the last couple of weeks. But the UK has to actually press this button. That's what's under the EU rules. And then they have 2 years. Well, they can't press it because meanwhile, there's this complete uncertainty at the top in British political leadership. The Tory party is now leaderless, and it looks as though the Labour Party is about to become leaderless as they boot out Jeremy Corbyn. And it looks as though, Bojo, Boris Johnson, is going to come in on the Tory. Well, they might need a whole nother election. This may, even the invoking of Article 50 may not happen until the beginning of next year. Then there are 2 more years. And by the way, secession crisis. What about Scotland? It voted for the EU. It's claiming now that they need a new referendum vote. What about Northern Ireland? It voted for EU. Some people in London are saying maybe London can go stay in the EU. The rest of England can,
Unbelievable what's going on.
So you've got big problems here, and then you've got the whole problem of a gaming issue whereby both sides, they say they want to get this resolved fast, which obviously that would be in everyone's interest to avoid the destructive paralysis of uncertainty. But the problem is that each side gains by holding out and making the other side make concessions. Now, the Europe would be happy to make concessions just to get this whole thing resolved. I think Angela Merkel, because one more point here, the EU has a huge trade surplus with the UK. That is to say, the non-UK members of the EU has a huge trade surplus. So they have a huge interest in being able to continue to sell to the UK. UK then resells a lot of that stuff around the world. They have these global supply chains. Germany alone has a $30 billion trade surplus with the UK. Well, believe me, Angela Merkel, like all German leaders, cares about her trade. I mean, she, you know, these European leaders, particularly German leaders, they take a real interest in their economy and their exports. They want this resolved right away, and they would be happy to give the UK anything it wants. But here's the problem. They can't. They have to be seen as punishing the EU. Why? Because everyone else is going to want out of that prison. Brexit, Nexit, Spexit, Frexit, you know?
Are we seeing the evisceration of globalism? I mean, is this?
Oh yeah.
Is it happening? Nationalism is going to take front.
People should be aware. This was no accident. Globalism and kind of the yearning for kind of multilateral capabilities, trusting in global and multilateral organizations, peaked in the United States and most of Europe in the very late 1990s. It's been declining ever since. This is 15 years at least into a trend. Okay, this didn't just happen with Donald Trump. This is a long trend. Okay, the whole world is moving more towards nationalism, isolationism, more local control, getting rid of these remote and abstract institutions, these big board of experts and so on. This is part of a long trend. This is just the latest episode. Keep in mind that polls consistently show this. Most recently, the Pew Research, that the UK is not unique in their dislike of the EU. The Netherlands, France, a number of other countries are as anti-EU as the UK. So the one thing that the EU leaders in Brussels want to do is make sure that the example of the UK and its departure deters others. You know, pour encourager les autres, as Voltaire said, to encourage the others, we must execute a few. You know what I mean? So this is the thing. You need to do this. We were talking this morning. I pointed out that the Austria-Hungarian Empire was often labeled because, you know, it kept all these little nations in Eastern Europe and so on. It smothered them. It kept them from rising up, and it was called the prison of nations. You know, the Austro-Hungarian. So all the Slovenes and the Slovaks and the Serbs. You know, they were in this empire. You know, and all nationalist movements were suppressed. The EU is becoming a prison of nations. I mean, it's not allowing these people to go out. And
well, we had a jailbreak last week.
We had a jailbreak. Now, a lot of people will say, I want to give kind of both sides of it. A lot of people will say, well, look, you know, the Danes had a referendum. They decided they didn't want, I can't remember which iteration of the Constitution they rejected. But then they gave a little bit of, they changed a little bit so the Danes liked a little more. They had another referendum, and the Danes said, okay. The same thing happened with Ireland. So the EU is also very good at giving in, negotiating, and this is actually a good sign for the UK. I would say for the UK, yeah, delay.
Let's jump into the questions on that note right there.
Okay.
Question from Paul. Fast forward 5 years from now, is Britain better or worse off for leaving the EU?
Wow. I would say if you allowed me to go 10 years, I would say better. 5 years, I don't know.
Gray. It's gray. You don't know.
But I would say in the long run, I think this is a healthy social, political, and cultural development. I think it's good that people have a sense of self-determination.
Right.
And I think that's the thing about the EU. It's a manifestly hapless and dysfunctional organization.
Right.
It can't control its borders. It has no influence on politically, in its near environs like North Africa, the Mideast, the Balkans. It has no control. It is ineffectual.
Sounds like
and
America.
This is why, what?
I was kidding. I said it sounds like America.
Well, I think we're still a little
Right.
bit more effectual than that.
Let's jump to a related question. Hi, Neil. This is from Bill. What do you think the immediate impact of Brexit will be from a political perspective? Is it becoming probable that countries like France and Greece will leave the EU? You had mentioned France.
Yes. Well, Marine Le Pen, this all depends on how the National Front does. Marine Le Pen now calls herself Madame Frexit. Frexit. So she's taking that UK secession, that UK departure, she's wrapping herself in that mantle. So she is celebrating this. And the leaders of all of the Eurosceptic parties in the Netherlands and Denmark, Sweden, Austria,
Yeah.
Germany, Alternative for Deutschland, Spain, they're all celebrating this. Now, I think the difference is this. In Southern Europe and in Greece, you have to remember, this is why the Eurosceptic movements aren't quite as strong in the South. And when they do arise, they're more likely to be from the left than the right. That's the difference. So, for instance, Syriza, which is the Greek, they're obviously left. And the same thing with Podemos, which actually did poorly in this election, just 2 days ago. They're from the left. But also, you have to remember that in Southern Europe was in some sense the huge beneficiary initially of the euro, got all this huge investment, all this infrastructure brought. So Southern Europe has these incredible mixed feelings about the EU, because on the one hand, yeah, the euro is a prison, and it's the reason why we can't reinvigorate our economy, and we're stuck with an overvalued currency. We can't export, we can't do anything. But my God, they really classed us up, They brought us in, they hugely reduced our financing costs, they brought us into this much bigger market. There's a great sense of anguish about kind of if they opt out, it's almost like admitting that we're losers. You know what I mean? That's a real example in Greece. Greece, if you're looking at the welfare of all Greek citizens, hands down, no question, they would have been much better off if in 2010 they had gotten off the euro, disavowed all the euro debts, gone on to the drachma. They would have been very competitive, in a very short time. And by now they'd be able to issue new credit. They would have a clean slate in terms of their balance sheet. They would be unambiguously better off. The problem is that the elites in Greece are obviously benefited hugely by the euro and the lower financing costs that they could do. And I think that's the issue in a lot of these countries. Elites versus, for instance, just going back to Spain, the People's Party versus Podemos. Well, the People's Party, with Rajoy as their leader, very timid. We can't experiment. We got to stick with the euro. It's what we know. And most voters agreed with them. Then you've got these young leftists, these political science professors and Marxists in their 30s who are leading this new party on behalf of young people in Spain who are, still today even 40 to 50% of them are unemployed. And they want something new. They're ready to experiment. But I think in Northern Europe, there's much more of a sense of, no, this didn't class us up. This classed us down.
Right. Question. So, there's so many implications, and you address so many of them. The consequences of this historic vote, et cetera. What's the low-hanging fruit investing implications? I mean, what's some of the obvious? You mentioned Dublin before. Is that one? Is Ireland a beneficiary? Do you buy Ireland? I mean, what are some of the obvious implications, if there are any, to you?
Yeah, well, that's one obvious implication. I would say Germany and Ireland in financial services, no question. And keep in mind that although the actual negotiations of what kind of free trade agreement the UK will actually finally be able to arrange, investors won't want all that uncertainty. That's going to last for years. And so a lot of people will say, wait a second, I just want to get I can't use London anymore. I want to go to some place where I can just be profitable now, and I know what the rules are now, and I don't have to worry about them anymore. So I would say, yeah, I would say Germany and Ireland. Obvious in anything with finance, not just financial services, retail, but even sort of wholesale and business services.
Right. Here's an interesting question. What do you make of, I think it's the Financial Times analysis showing that regions in Britain voting most strongly in favor of leave were the most economically dependent on the EU in terms of trade?
I think that is true in terms of goods trade, right? Because that's true, and because you look at many of these rural areas, they have a few manufacturers that are very often, that's all they have in these regions, and that manufacturer is either owned by an EU, at least partially by an EU firm, or they export directly into the EU. Yeah, they're hugely dependent on that. Right. London, though, is also hugely dependent. I mean, let's face it, all of the EU all of the UK, including London, including the city, is dependent on this special relationship. Here's another area that I would be hugely positive on, if anyone is interested in investing in UK firms, is that I would look at firms in the UK that are labor intensive, meaning they don't depend a lot on raw materials and intermediate inputs, and they export primarily, although not necessarily exclusively, to non-EU areas. Okay, one obvious example would be tourism, which is an export of sorts. I mean, people come in and get, but I would say even companies that are simply exporting around the world with not necessarily using a lot of imported resources. This is a bonanza time for those firms. Pound down 10%? Are you kidding? I mean, they're gonna rip. They're gonna make a lot of money. And now that you can invest in them, the pound's already down, so you're not going to lose your money now. Right. I would say that, in other words, remember, it's going to be a reshifting of trade. A lot of the high value added stuff that comes from the city, they're going to lose, and that's going to be obviously a big decline. But they're going to gain as well. Right. That's why the pound is going down. So they're going to pick up other kinds of trade. But I'm saying, if you can move out of the more financial business service oriented stuff that's particularly done or handled by large multinational companies, instead go maybe for somewhat different or smaller companies, which are basically involved in trading outside the EU. That's just
you see more Americans traveling to London now, take advantage of that, that strong dollar versus the pound. Is that, you can see an uptick?
Aren't you going? Aren't you going later this year?
Yeah, exactly.
and it's not just traveling; it's real estate.
I mean, you see the articles already talking about parity potentially coming at some point, down the road. What are your thoughts on that? Pound dollar parity.
Yeah, that would be a stretch. It would really have to drop for that. That would not be a good sign.
Right. Right. Here's an interesting question. Do you see any connection between what happened with Brexit and what's happening here in the U.S. with Donald Trump, et cetera? Please elaborate on your thoughts.
Very same kind of voter profile. That's been pointed out many times. It's true. First of all, age-wise, the typical Brexit voter was between 45 and 65. Kind of a little bit boomer, maybe a little bit younger than that. That's exactly the top profile of a Trump voter. It goes down a little bit over age 70. People kind of turned off by that brash style, and it goes down very steeply under age 35. It's exactly like the profile of a Trump voter, identical. And you look at what's it correlated with by region of voting district. Low share that are in their professions, low share that have college degrees. Interestingly, very highly correlated with the share in each voting district that had passports, right? Well, we know that about Trump voters. Trump voters in all the counties where they won are the least mobile Americans. You ask them about their ancestry, and they just say, "I have no idea, American." Right. So no sense of and least likely to have said they've moved. and very distrustful, obviously, of big institutions, experts, authority. Now that distrust of experts is shared by the left too. But I think just like in the, again, when we talked earlier about Syriza or Podemos, you can see that it is possible for the left to hate the EU.
Right.
Remember that Jeremy Corbyn, who's the head of the Labour Party, may not be for long, but as a Labour Party, could not bring himself to be very enthusiastic about staying in the EU. Why? Because the Labour Party back in the 1970s was anti-EU. And the Labour Party was more anti-EU than the Tories were back then. Labour hated the EU. Why? Because the EU was a tool of multinational capitalists who wanted to dismantle all of these governmental protections that we put in place for union workers, right? So social democrats often very much dislike these neoliberal multilateral institutions. They're very interesting. You know, the EU can get it from both sides, both left and right. But I do think that in the UK, as in the United States, you see the energy coming obviously mostly from the right and the same attitudes. Even one psychographic, which is associated with Trump voters, has also been associated with Brexit voters, and that is the quote-unquote authoritarian personality, which actually is a very interesting a questionnaire which will ask things like, you know, what do you think about people who break the law, just in general, you know? Or my classic question, which I really love on this authoritarian poll, is what qualities would you admire in your child? And they will compare to, you know, respectfulness or curiosity. Interesting questions like that. That's a huge divider of personality type.
Right.
And that's very much identifies Trump versus non-Trump voters in this country. I think something similar to.
On a somewhat unrelated note, actually Trump real estate, there's an angle right there. I'm very curious about the London real estate angle. Are the real estate and home construction stocks still the most exposed to Brexit risk, or is that now priced in? You talked about that a little bit earlier.
We talked about it. Enormous declines in any major publicly traded company in the UK that is involved in real estate. They had the largest declines on Friday. I mean, you can check them out now. I mean, if you think they're bargains, I just don't think, I think given the exodus, the Brexodus, let's call it Brexodus. Given the Brexodus from London, from the London area, and one thing that I should mention, and we pointed out in this piece, is that it's not just that London has all of these high-priced people that are probably going to be exiting. Right. But about a third of the UK's foreign-born residents, there are about 3 million, about nearly a million, live in the London area. They're the first to go. They're not attached to the UK by childhood or by family. Many of them are just wealthy people living there for convenience. They could live anywhere. I mean, they could easily move to Vancouver or Hong Kong or anywhere. If they feel that UK is no longer a inviting, pluralistic, you know, society, doesn't have that pluralistic vibe they like, they may leave. Obviously, London's doing all it can to help to reassure these people that that's not going to happen.
Right. All right. I think we have time for one more question here. Interesting question just came in from Parker. With the whole EU experiment coming into question, how does uncertainty not transfer to places like Germany?
It does. And I think that the big surprise on Friday is not how much the FTSE went down, but how much all of the continental exchanges went down. They went down much bigger than the FTSE, and now to some extent that's understandable because a lot of the value in the UK markets were obviously was occurring not just what happened on the bourse and the exchanges, but what was happening in the exchange rates. If you add the decline in the pound with the decline, okay, so it was pretty big in the UK. But were we expecting 6-7% declines in the European exchanges, -10, -12 in Spain and Italy?
Which were already down enormously.
Right, and they've gone up a little bit today, but then they went down on Monday. They're still about where they were at the end of Friday. No, you didn't. And here I would just bring up the following things. One is, again, we talked about that. The EU has huge exports to the UK. They're worried about that. Number two, the continent doesn't have any banks that work. They're being squeezed by, Mario Draghi's negative interest rates. They have a lot of non-performing loans. They're highly levered. They need London, and now they're being told, well, you have to do without London. And these peoples in Brussels will not allow these London banks to compete in the EU if the UK is out. I mean, they can't allow that to happen. If they allow that to happen, then the entire EU breaks up. So that's the problem. And thirdly, and most importantly, political risk. And we saw that. Why did Spain and Italy go down so much? Because investors are tagging countries by their risk of in some ways breaking out or breaking off. People are beginning to see the EU as a tainted organization, as an organization that suddenly really doesn't have a future. And I think if you talk to people today in the major continental countries, you talk to people in France and Germany and Italy and so on, they will tell you this is a devastating blow for the whole prestige. So much of the European Union in its growth during the 90s, this ever closer union and so on, was a psychology. It was progress through history. We're all going to get more powerful. This is just this gaping wound now.
Right. Let me ask you one question before we go here. Your crystal ball, 5 years from now, is the EU, is it gone? Is it here? Is it in some wounded form?
Given the EU's Byzantine prowess at always negotiating new arrangements and being able to, it's very flexible that way. I find it impossible to believe that the EU won't be around in some form. I think I would give that 100%. But I think that of necessity, they will be forced to gradually negotiate away a lot of the stuff they have. I think you may find the emergence of more than one currency. You may find increasing devolution. It's going to be a little bit like Scotland and Catalonia and Flanders, but it's going to be these nations gradually just forcing themselves. And I think the EU will be very canny and very deft at being able to negotiate different arrangements, but gradually doing something to keep it all together. But it may end up ultimately, like the Holy Roman Empire,
neither holy nor Roman.
Neither holy nor Roman nor an empire, right? But it was just a congregation of pieces that just called itself something collectively. And we could go back, which I think wouldn't be bad, to the whole idea of just a trade union, just a common market. Do you remember that? The common market. That was a great idea.
But isn't the problem that there's so much regulation? There's so much,
It's because they constantly wanted to go further. They said, well, it's not enough to trade to each other because we all have different regulations. Let's make it easier and have the same They basically kept co-opting stuff that should have been the political prerogative of each sovereign nation. And they said, all for the sake of trade, all for the sake of someone's idea of cost-benefit analysis, single currency, single regulations, total migration Did that make sense? No.
Well, listen, there is a tremendously deep and granular article. It's a long one, but it's well worth the read. It's called Global Brexplosion. It's on our website right now. We tweeted it earlier this morning. There's a lot to digest in your article. This new piece from About Everything. This series is tremendous. So thank you for joining us today, and we'll look forward to seeing you guys all next week. Thank you.